Welcome everyone to Vested Interest. This is Shane back again for the stock pick of the day video. It is April 17th. We're going to take a look at one out of the REIT, the real estate sector. This is a REIT Prologis. Let's jump right in. And for those of you who may be stopping by for the first time, or if you just have not done so already, go ahead and hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. Hit that subscribe button. It really does help out a small YouTube channel like mine grow and get the word out. Dividend growth investing is what we cover on this channel. And in my opinion, it is the best way to get out of the rat race and on into financial independence, financial freedom. And make sure the notification bell is rung down below. Doing all that only takes a second, and again, it really does help out a small YouTube channel like me trying to get to 1,000 subscribers, so I need your help to get there. Really do appreciate everyone who has taken the time to do that. And drop a comment down below. Let me know what you think of the video. Let me know what you think of Prologis. Is it in your portfolio? Is it one that you have been watching? Is it one you're avoiding? Is it one that you may be selling out of your portfolio? Let me know. Really love to hear from you in the comment section down below. Now, this is the vested interest stock screener. This is how I look at a company on a high level to see if I am interested in investing. It is just a screener, so there is more that goes into it. Just because it might meet 5 of 8 or 6 of 9 if it's a bank or a financial company. I had in price to book. That's why it's highlighted in green. You can use price to book for any other company. Just for banks, it's real simple. Use 1, fair value. Anything under 1, undervalued. Anything over 1, overvalued. For other companies, you should compare the price to book to other companies, similar companies in the same sector, to see what their price to book is, and it compared 2 or 3 or 4 different companies, and that's how you use it that way. Now, this is also how I set up the videos here for the stock pick of the day series, and it's how I look at a company that if I have already purchased and is in my portfolio, I back check to see if it's still meeting some of the investing criteria that I've set up. Now back to Prologis, and if you want to know more about this company, check them out at www.prologis.com. That's www.prologis.com. That is their homepage where I pulled this information from. Our people are the key to our success as we aspire to become the leading global real estate company as measured by customer service, employee engagement, financial performance, and balance sheet strength. So again, they're a real estate company. They are a REIT, so they own and operate real estate, and really it is around logistics facilities. So shipping, storage of materials is what their bread and butter is. They are scattered across 19 different countries. The properties they do own, 67 customers, 2.8% of the world's GDP flows through their distribution centers. So distribution centers, 1.1 million people work under our roofs every day. 25,000 individuals will be trained through our community workforce initiative by 2025. So a growing company, again, with their footprint in 19 countries. Now, the reason we're taking a look at them, down 7.19% on the day, huge drop on the day. We are talking about Prologis Inc, ticker PLD. This is a real estate company, a REIT out of the real estate sector. Closed out the day at $106.49. 52-week range as low as $96.64, as high as $137.52. And with this recent pullback, they are closer to their 52-week low than their 52-week high. Market cap intraday, $98.508 billion. Beta of 1, so they are just as volatile as the overall market. You can see that volatility today, pretty much just a drop, sell-off, even from the pre-market on into regular market on into, well, it looks like they're rebounded a little bit in the after hours, at least as of 422. PE ratio is $32.37 per share. That seems elevated, but this is not a good metric for REITs. You want to look at funds from operations for REITs. So I disregard PE altogether for REITs. It's just not a good metric. Earnings per share, EPS, sitting at $3.29 per share. Earnings date was today, so I'm assuming something around the earnings. And if you are interested in this company, you might want to check out what's going on with their earnings, whether they missed on their top and bottom lines, whether their forecasted for the remainder of the year was lowered for guidance and expectations. You'd have to check that out to see what's going on. Forward dividend is $3.84 per share on the year. They are quarterly payers, divide by 4, or we'll see it here in a little bit. Just wait for a little bit and we'll see that as we look at the dividends as we wrap up the video here. Dividend yield, a nice dividend yield at 3.35% starting right now. Ex-dividend date was March 15th. Looks like they paid out on the 29th already. So if you were to buy them now, you'd have to wait a few months to get that next dividend. And a 1-year target estimate, at least according to Yahoo Finance, where I picked this information from, $144.58. So that's a significant upside as far as stock price appreciation over the next calendar year. Again, at least according to Yahoo Finance. Now we're going to take a look at dividend yield theory to see if this one is potentially undervalued. To do that, if you were to go to Yahoo Finance and over here on the left-hand side from the chart, you'd see some tabs you could click on. Summary is the one you'd go to. Summary is the one that you'd see the chart. Analysis, balance sheet. For this one, we're going to look at I'm sorry, one of my kids just walked out and was trying to get my attention. For this one, we're going to look at statistics. We're going to go down to dividends and splits. We're going to look at their 5-year dividend yield average at 2.35%. We compare it to its current 3.35%. Same number over here, right? This says, I know it says forward, but it's the current 3.35%. It's always forward looking. And since it is higher, and is significantly higher, as a matter of fact, this speaks to some undervaluation. Not only is there undervaluation here, but there's a little bit of a market of a little safety in there. Payout ratio looks elevated, but again, for REITs, you really don't want to pay attention to payout ratio. There's a lot of times these are going to look wonky. I really hang my hat on funds from operations. I really need to find a source where I can get that information readily available and include that like I do price to book for banks. But I disregard payout ratio. REITs are required by law to pay out 90% or more of their free cash flow. So this is not a good metric either. Again, if it was to stay elevated, if funds from operations got out of whack and it was elevated, then I would be concerned. But this is not a concern to me as far as REITs. I mean, you look at, let's talk about realty income for a second. I think they're like a payout ratio of 200%. So it looks like it's really out of whack. But again, not a good metric for REITs. Now we are going to look at free cash flow. And if you were to go over here on the left at Yahoo Finance, you could click on the balance sheet tab. That's where you find free cash flow, and there's a lot of good information under that tab. You're going to find their income statement. You're going to find, is their revenue growing over time? Are their margins expanding or contracting? What does their debt look like? They have more assets than liabilities, short-term assets, long-term assets, short-term liabilities, long-term liabilities, incoming revenue, all good information you should be looking at a company to understand the financials. For our purposes here, we're going to look at free cash flow because we want growing free cash flow. Typically, if a company has growing free cash flow, they have growing dividends. And as a dividend growth investor, that's what I want. Hopefully you do too. Going back to 2020, you can see here $2.9 billion. 2021, $2.9 billion, pretty close, a little bit of a bump up. 2022, 4.1, 2023, 5.3. Nice, steady free cash flow growth. They did repurchase some shares back here in 2020. REITs in general don't repurchase a lot of shares. A lot of times they were actually doing the opposite, where they're putting shares on the market. So that is something to watch as well. But nice, growing free cash flow. I like to see that. Now, I always recommend more than one source. Another one that I like is stockanalysis.com. You pick any sources that you want. Just make sure you're not blindly looking at just one source. Sometimes the information is not updated. Sometimes it could be inaccurate. So I like 2, if not 3 sources to make sure I can back check and make sure I'm getting updated information and accurate information. That's the idea there. 18 analysts have taken a look at this. They call it a strong buy. It is right on the edge of a buy. This would be a strong buy, a hold, a sell, and a strong sell. And if you were to go to stockanalysis.com, you could hover over each one of these and see how many of the 18 analysts call it each one. So more are leaning towards buy or strong buy than they are hold. If there are any sells or strong sells, it would be very little. Strong buy on this one with a low estimate of $120, and it currently sits lower than their lowest estimate by 12.67%. Average estimate of $141.28. That would be a 32.65% increase from where it currently sits. And if it happened to hit their high of $170, that would be a 59.62% increase. All the while, you could collect that 3+%, almost 4% dividend yield, at least if you were to buy them now. Now we're going to get into statistics here, and we're going to look at return on equity and return on invested capital. I typically like 10% or better on this metric. Now, again, for REITs, you would want to compare this to other companies in a similar sector because they're going to look low. Return on equity, 5.7. Again, not in line with the 10% I typically look for. Return on invested capital, 4.22%, under the 10% I typically look for. But for REITs, this is not egregious. This is right in line with, again, if you go to realty income, or some other ones, storage space, logistics companies that are REITs, they would be really close to in line with the same numbers. EPS growth, I like 5% or better. This is a little low for me, 4.19%, but not egregiously so. Revenue forecasted growth at 8.22%. That's a very good number. Now on to the dividend. Quarterly payer, like I said, payout ratio, again, I don't pay attention to this. Look at funds from operations. Now this is nice. Double-digit dividend growth, 10.19%. They've been growing it for 10 years. Buyback yield. So this is where I get into, I would assume without even looking at it, based on this buyback yield, negative 17.27%, they are putting more shares into the market. So they are diluting you as a shareholder, but a lot of REITs do that. That's how they raise capital for new acquisitions, new purchases of properties. So not a huge issue, but that is pretty high, 17.27. I'd like that to be lower in the single digits. And shareholder yield negative 13.69%, and I would assume that's again from the share dilution that you're getting on this one because it's a REIT. Now going back to 2021, they were paying 63 cents per share. They jumped up that in March 2022 to 79 cents, March 2023 up to 87 cents, and here most recently March 2024 to 96 cents. So I wouldn't expect another dividend raise until March of 2025, and they do pay out on that March, June, September, December timeframe like most companies do. Well, that is Prologis, again, a REIT out of the real estate sector, really focused on logistics facilities, shipping facilities, shipping out materials and holding materials for other companies is what their bread and butter is. And they are spread out across 19 countries. So I do like that. There's a bit of diversification there. If one country is not doing very well, maybe another country is, and helps balance out their books a little bit. So I do like that about them. I am not looking for anything in the REIT space. A lot of REITs have pulled back because of the Fed rates still elevated, and doesn't look like they're going to cut those anytime soon. At least that's where they're leaning right now as of the most recent meeting. I never thought they would be cutting rates this year anyway, unless inflation got down to the 2% range. It remains in the 3% range. So until it gets down there and stays down there, I just don't foresee any rate cuts and no reason to cut rates, right? There is no real reason unless something drastically happens in the market where we start losing jobs, unemployment starts rising. We need to get inflation back down to the 2% range. That's their target date, and that should be the goal. So I'm not a big proponent of dropping rates just for the sake of dropping rates, but that's a different story. We can cover that some other time. Perhaps I should do a video on that. Well, as always, appreciate you stopping by, and if you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community. Hopefully you have started your own investing journey, and if you have not, drop me a comment and let me know why you are not putting money into the market weekly, bi-weekly, once a month, quarterly, once a year, whenever you get your taxes. Why are you not investing in the market? Hopefully you have started your own investing journey. Again, in my opinion, it is the only way to financial freedom, buying assets and then building on the return from those assets and eventually reaching financial freedom. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Prologis you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below. I'll work it in the rotation on a day it pulls back. I do not cover tobacco companies, and I do not cover non-dividend paying stocks on the Stock Pick of the Day series. So make it a non-tobacco company and a dividend paying stock. Even if they've just recently started paying dividends, I'll cover it. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you've had a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. An investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount of comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Or seek the advice of a certified financial advisor.